Alright guys, welcome to another video, and in this video we are going to talk about what does the price of a share mean. Does it mean that, does it mean that you can compare the stocks using the price, or really what kind of a metric is it? And if not, if you cannot compare the stocks on the basis of price, how do you compare them? How do you know if stock A is better than stock B? Well, there's a whole lot of metrics to do that, but in this video we're going to talk about one specific metric which is very fundamental, and which is, I think, almost one of the top 5 metrics out there. So let's get started. All right, first off, we're going to begin with saying, is the price of a share conclusive? Do you mean that if company A's price of stock is, let's say, $170 and company B's stock price is just $100, does that mean that company A is doing better, or does that mean that company A is bigger and stronger and more powerful and a greater, much better investment? Well, it doesn't necessarily mean so. In most cases, the price of a stock means nothing. If you have heard me talking about the other videos, I already talked about how Warren Buffett invests and what is his investment strategy, and that is to actually find out the price of a stock by looking at the company's fundamentals. So he doesn't really look at the price of the stock, but he checks out the price of the stock by basically calculates it using his own algorithm, and then based on that he looks at the actual price right now. And suppose he's getting $200 as the optimum price of the stock, and right now the price is $160. So he says that, all right, I understand that this company should be valued much more, because according to me the price is $200, and right now people are thinking that it's worth $160. So let me do one thing, let me buy a lot of these stocks, because in the future I'm sure that people will realize its actual value, and they would push it towards 200. Alright, so that's how he makes most of his money, and definitely that is a long-term investment, because he's expecting a return of over I think 30-40%. But again, let's look at the let's look at Apple stock. Alright, and if you have watched my last video, you already know what market capitalization is, so in that case you should be able to understand this easily. Alright, what is the current price of the stock? It's $174 today. That's on the 28th of February 2019. So it's $174. Alright, what is the PE ratio and how do you calculate it? I'm going to give you the formula for that. Just wait for a few minutes. You don't have to do a lot of calculations, you can just get it over here, by the way, but I want you to understand where it comes from, so that you fundamentally understand what you are dealing with. Trust me, the more in depth you go, you can write this down, you will definitely make a whole lot of more money, because you will understand exactly what is going on. And some people don't even understand what's going on. They're just throwing their money in the market, and you already know they're going to waste their money and anyone else's that they put into the market. Anyway, so PE ratio in this case is 14.65, and the price is $174. In case of Facebook, the price is $162. Does that mean that Facebook is a smaller company, or it's not as good a company? Just on the basis of price, you can never tell. You can never tell. I can show you prices of other companies which are really, those companies are basically nothing, but their stock price is so much more than the stock price of Apple or the stock price of Facebook. But again, the market capitalization would be in most cases able to differentiate between that. So you can, because those companies are smaller companies, so they are usually in the mid cap or the large cap, and these are ultra cap companies. So the market capitalization in most cases will be able to help you with that. But how do you define what is a better investment? So let me tell you what is the PE ratio. Now, PE ratio is price to earnings ratio. All right, let me just write that down. PE ratio is, let's write it over here, price of stock. This is the current price of the stock, which keeps on changing every single day. So the PE ratio also changes every single day. That's what you have to keep in mind. Everything changes over here. Right now the price, the PE ratio is 14.65. I want you to go and check on your laptop whenever you watch this video. I mean, 1 day later, 2 days later, two days later, it's gonna change. Right? It's not gonna be constant. So let's look at that, and this is the price of the ratio divided by the earnings per share. I'm not going to be going very much into the depth of what is EPS, but really you can think of it as the profits that the company has divided by the number of outstanding shares. So really, you can, if you don't understand that, don't worry about it. You can just get the earnings per share value over here. It's just based on the fact that the company has so many shares out there and it's making such and such profit. So really, per share, this much profit is allocated. That's all. All right. So EPS in this case is 11.93, and you can see that basically the price of the share is 174.87. So you can always just do a quick exercise and divide these. Let me actually do that for you. Calculator, let's pull that up and let's see the price. What is the price? It's 174.87, right? 174.87 divided by the earnings per share. And what are those? That's 11.93. So that comes out to be 14.65, exactly what we are looking for, right? PE ratio 14.65. Now what does this entail? What does this represent? Because Facebook has a PE ratio of about 21 point, I think, 21.48, all right? And in case of Apple, it is 14.65. So which is a better investment? See, because the PE ratio changes every day, you cannot just base your investment on the basis of PE ratio. All right, my PE ratio is better in case of Apple, so I'm gonna go with this. By the way, PE ratio, the smaller the better. Why? Because what it means essentially is that for every, in case of Apple, 14.65, what it means is for every $14.65 that you invest in Apple, you can expect, let me underline this, a return of $1. Right, so for every $14.65, let's just round it off to $14, you can expect $1 coming back to you. So in case it is $28, you can expect $2 coming back. So it just keeps on going over like that. All right, so the whole point in this case is that the P ratio is the lower the better. Again, you cannot just compare companies based on the P ratio. All of the metrics have to be taken into account. At least use 3 to 4 metrics when you're evaluating the stocks. All right, and I'm going to teach you each of those metrics, and if you keep on following these videos, I'm going to make sure they're as easy for you as I can make them. All right, PE ratio in case of Facebook is 21.48. Again, you can understand what that means. For every $21.48 you invest in Facebook, you can expect a return of $1. Right, so that's really the whole concept of PE ratio. There's a whole lot of other things. You can actually relate the PE ratio to the market capitalization as well, and it's just a game of formulas. You can keep on doing that, but mostly you do not need to calculate anything. A lot of it has already been done for you by the investing.com. Just go over here and write the name of the stock. You can write anything like Tesla, and it'll pull that up, and you can just click on this, and actually I'll have it open over here. By the way, one more thing I wanted to discuss with you is, since it is basically price of the stock and earnings per share, not every time will the profits after tax, or in case you do not understand profits after tax, just think of it as profits, don't worry about it for now. The profits won't really be positive every time. Of course, sometimes the companies do have a loss. In the last 12 months, they didn't make so much money, so they have a loss in terms of that. They may be their infrastructure, or maybe something that they spent at, maybe they cleared their debt or something like that. So in that case, company doesn't always profit. They don't really have a lot of profit to show. All right, so what happens is sometimes the company is in a loss, so the profits, or you could say the earnings per share, is really negative. So if one share was worth, let's say, X amount of dollars, now depending on the total amount of earnings, the company has negative earnings, that all of that earning is basically going to be allocated to each and every stock. So really you can think of it like that, but don't really worry about it so much. But just think that if EPS is negative, what happens? The PE ratio is nothing. The company doesn't have a PE ratio in that case, and that is what is happening in the case of Tesla right now. You can see the PE ratio is none. Why? Because the earnings per share is negative. All right, it's a negative EPS because the company has possibly thrown out a loss, and that's why it is not really doing so well right now. And you can just think that PE ratio is negative, nothing right now, right? So you cannot really evaluate on the basis of PE ratio. But again, there are a whole lot of metrics that you can go forward with, and you can check out, and you can use those to your advantage, right? So I hope you understand really what does the price of a stock entail, and exactly it's not really important, and you need not even look at it as long as you have the money to buy the stock. Definitely just don't even look at that. The other things there are that you should actually be looking at, you can do that. And there's a whole lot of scenarios. I'll actually tell you about them as soon as I go. I want to give you more and more practical examples, but to do that I need you to understand some of these basics before we give you those practical examples. All right, so let's continue watching these videos. And in case you want to get in personal touch with me and ask me questions personally, you can do so by watching me on Instagram. Follow me over there and hit me up, just send me a text, and I will do my best to reply to you. All right, so I hope this video makes sense to you. I hope this helps, and I will see you in the next one.